Welcome everybody. This is the first Gibraltar DeFi Meetup. And I'm the CEO and a co-founder. And on my background, I started doing Bitcoin 2013. I was co-founder of one of the first Bitcoin exchanges in the world called Local Bitcoins. After that, I learned that the Bitcoin is a shitcoin. So I have been doing Ethereum and others. And nowadays I'm open-minded and I can take any coin. Like I don't discriminate. And trading strategy, as we spoke before, is algo trading. So that's the word for trading that's done by a computer and not by a human. And it's different from investing. So it's basically when you are doing trading, you don't care what kind of shitcoin you are trading as long as you are making profit. And it's just like a very, very systematic approach. You buy when it's low and you sell it when it's high. Or if you are shorting, you buy when it's you sell when it's high and you buy when it's low. And it's a part of the larger concept. It's called quantitative finance, or just quants. And it's a branch of science that you are trying to find based on math and statistics. You are trying to find opportunities on the markets where you can see that, okay, this market is not right here, it's going to go down or it's going to go up based on the math, what it's saying, based on the model. And you can see this in a price action. So just if you follow the price of the asset, you see the history, and you are going to see, at least in the near term, it's going to follow this path. And based on that, you have some kind of vision. Okay, you predict, you have a model. Okay, it's going according to this model, it's going to go up or down. You just do your trades based on that information. And it's quite big. So half of the all trading in United States is done by a quant funds, and this excludes all high frequency trading. So half of all trading in the world, I would say, is based on the algos at the moment. So it's not a big, like it's not a small thing, and it's still getting bigger. So in DeFi, where we are focusing on, there is not much yet of this kind of activities. So I think we are one of the first protocols trying to do something that takes the old model of the stock market and bringing it to the decentralized markets. And those who are developers, this is kind of a simple overview what it looks like. So in some source you have market data, so you have all the past trading history of the market. Based on that data, you extract features. In this case, we call them technical indicators. They can be simple ones, like just the moving average of the price. And moving average can be a average of 20 days, it can be average of 100 days, or it can be average of 1 week. And then you feed these to your algo, and there's a lot of algos. You can just go to read school books, and you pick one and you see what happens. And if you are really, really fancy, instead of using something like ifs and for loops, you can use a machine learning to come up with your trading strategy, and then it's really, really going to like a high level that the machine is not only doing the execution, but it's also doing all the thinking for you. And where we actually come in as a protocol or as a product is that we execute on decentralized markets. If anybody has used Uniswap or Aave or whatever, you can connect with your MetaMask. That's where we operate. So we don't touch any centralized markets like Binance or US stock markets or so on. We just want to be the first at the DeFi markets, and that's what trading strategy is doing. And this is simple example. I think it's a little bit too small for the screen here. But if you look at the left edge of the screen, so there are like two moving average of the price going on, and when they overlap or when they cross, you have a slow moving average and you have a fast moving average. When they cross, when the slow goes over the fast, you know that it's time to sell, and when the fast goes over the slow, you know it's time to buy. This is like a very, very basic example. And on this chart, you can see there are some colored regions when it's saying that, okay, when it's red, it means that the algo is shorting, so it's basically making profit if it goes down. And when it's green, it means that the price is going up and the algo is buying. So it makes money if the price goes up. And of course, you can't always predict what happens, but good news is that you need to be only correct like 51% of the time to make money. And if you are correct enough, you are even making more money than inflation, which is 10% at the moment. And this is basically all the fundamental of the technical analysis and trading based on the algos. And what comes to the trading strategy, to our protocol, so I think the best existing comparison point what we could say from the existing markets is a service called TradingView. There's a screenshot of that, so you can basically do analysis there. It's a pretty big website, so it's one of the top 200 sites on the world, and it's used by everybody in a stock market, it's used everybody in a crypto market, and so on. So we just want to, as a trading strategy company, we want to be the TradingView, but for DeFi markets. And if you are interested to learn this stuff, we have a link for you. So you can just go there. I think it has everything. You just need to understand programming. You don't need to even understand Python. That's based on, that's our language for our strategy, but you just go there and there's a list of books, there's a list of tutorials, there's a list of websites where you can go on and you can start learning. And yeah, so more about the trading strategy is that, as I said earlier, we are doing decentralized markets only. Uniswap, PancakeSwap, Aave. And what makes us different from the hedge funds or brokers or centralized exchanges like Binance is that we are what's called non-custodial. So we are based on smart contract tech, and when you are interacting with our protocol, you are always control of your money. So no point in time, like any of our team members or anybody else can take your money or value what's there. So we are, it's called non-custodial. So always the only person that can make decisions is you. Question?
I have a question. Like you mentioned Aave, so you use Aave to borrow some shit coins to trade them on the centralized exchanges, because Aave is not a.
We use Aave lending markets to open a short position.
Okay.
Yeah. And this is the main difference. So we are non-custodial. So even if V3, we have me, Teemu, and Lawrence are going to be hit by one of these red buses tomorrow, and the company goes down or under the bus, so to say, you can still get your money out. There might not be updates, but at least your money is always safe, and that's kind of our value promise. And what's also a major difference from any other companies in DeFi space, that we have created a new layer of abstraction. So before this, all these strategies and whatever there is in DeFi yield farming was written in a programming language called Solidity, and whoever was doing it had to know like really low-level details of how blockchain works, what smart contracts, so on. So we have created Python interface, and most of the quant finance people in the world, they know Python. They know nothing about Solidity, so it means that we have a market where we can take some people in what I call a dinosaurus finance and move them to a decentralized finance, and they can still have their existing knowledge in the head, like how markets operate. They don't need to learn anything new. They can just apply their existing skills to DeFi markets and make money. And we are offering two kind of strategies. So we have public ones that are more like DeFi and yield farming. That what made DeFi popular. That you have just a list of vaults where you can choose where you invest. So that's our goal. That we are going to offer public ones. That there's a list on our website and you can go there. They have a different risk and reward profile. So if markets are operating perfectly, it means that your profit goes always up with your risk.
So if I have a winning strategy as a trader, why would I share it with others?
Probably you wouldn't. But if you are a guy who comes from India who doesn't have capital, they can do a profit sharing model. So they don't need to put their own capital, but it's a profit sharing, unlike the competing service where it's always at the moment it's a flat fee. So if you want to invest to some strategy made by a guy in the developing countries, you are not going to pay anything unless it makes profit. Of course, you might lose money because that's the risk of investing and trading. But at least it's fair in that sense that it's always profit sharing. And when it's profit sharing, it means that there's a very, very high incentive to make it work.
And so when I have capital and don't have strategy, will I be somehow incentivized to use this protocol, or is the only incentive as a, for example, I'm a fund,
yeah.
I want to allocate money there, what's in it for me?
Yeah, so for institutional investors and banks and the likes of those, we learned very fast that they don't like public strategies, even if it might work for them. Like most of the macro strategies are very public and you can learn them in a school book, they are not like magical. But we offer private strategies, and in this case it's a black box. So you can run one of our Oracle nodes yourself. It doesn't need to interact at all with our system. Of course, we can provide you some services like security and backups to stop if something goes wrong. But if you want to just run the software, you can license it out, and then you just make a normal software license, and that's it. And we don't care what you do with that as long as you pay us. So it should be a straightforward business deal in that case. And it's I don't know if it's going to be public ones like in DeFi yield farming, or it's going to be private ones. But I would say that we have a very, very high appetite for both. So we don't know which one is going to be a bigger in the long term. Yeah.
About profit sharing, so you said that it's non-custodial. How does that work then? How do I get a cut of someone copying my strategy?
Yeah. So it works. We are in a way that there is a smart contract called Vault, where you deposit your reserve currency. That's in most of the cases it's going to be a USDC. And then the oracles are giving instructions to Vault, like buy and sell. And the strategy is public, so somebody can copy it, and if they set up all the infrastructure and so on, they can do it themselves. But for the most of retail investors, that's too much work. So if you are going to invest $100, you are not going to invest $10,000 on servers. And so it can be copied. But most of the public strategies are going to be very macroeconomic ones. So even if you copy it, it's like there's no benefit in. And in the end, it comes to the point that, okay, what's the cost of me for trying to set it up myself, or just buying it as a service? And yeah, the funds are in the Vault smart contract, and then the instructions, and based on those instructions, smart contract is going to buy or sell. It can't do anything in it. It can't say that they give all the money to Mikko. So it's limited what it can do, and that will give you the security like what you would have with the crypto funds. That has been happening sometimes, that owner takes all the money for themselves and buys a Lamborghini. So I don't play Pavel, but
I'm more into NFTs than cars.
yeah. But that's the value promise here, and even for the some of the institutional investors we have been spoken with, even the fact that if they are sometimes buying these kind of services from individual traders or other funds or some kind of proprietary traders, and there's always the element that okay, even if these guys don't cheat us like on a macro level, they are always going to cheat us with fees. And because if the fees are determined by the smart contract, you can't cheat on fees, and that creates a factor of trust. So at least these guys are like not trying to send us a wrong invoice. And that's alone is I spoke with the one guy who worked for a big investment bank, and he said that problem alone that you solve how the fees are calculated would saved him like millions of dollars per year. Any other questions?
Web token.
Yeah. Okay, we are getting there. So what we are going to do first, we are going to launch later this year. So our go-to-market is we are doing this kind of what is called directional strategies. It's not high-frequency trading. It's not arbitrage. We are doing it because nobody else is doing it. It might be wrong, but we can change it later. And they are based whatever we see on the stock market, where you have like 50 years of history, like you can do all kind of stuff. And we start with the private strategies for all of our existing investors. We are going to offer them first, and then we start to expand it slower and slower until we are in a point that we can open it for public, that anybody can invest. And in that point there is going to be a token, and that token is going to be a part of the governance layer that's taking care of the protocol and getting also some kind of a revenue share of the profits. Yeah, I think this one we can skip. This is not so interesting. And yeah, and why are we doing this? We are here in for the tech. So we have identified at least 3 different parties who don't like what we are doing. So first one is the hedge fund industry, and if we can replace the managers with smart contracts, then there's no point to pay management fee anymore, and it should be a efficient way of doing funds in the future. We are still far away, but maybe in 5-10 years we get there.
So we just had a small secure stable committee and we will send you some money.
Maybe.
You make 40%, of course. Yeah, you promise?
Yeah. The other one is that there's a lot of existing trading bot services on centralized markets like Binance and FTX. Their business models are not very solid. Like they are based on ripping off the customer. So I think we are going to offer for these customers who are using these existing trading bot services a lot of more value that existing companies do. And of course, there's the last one is the professional traders. So if we give the average Joe that's not very good buying crypto, like what they get happens is that they go to Twitter and they click some random link that says buy Luna Classic and go and buy. We offer a little bit smarter way to invest. And if it means that most of the investors are getting smarter, it should also mean that the average profits of the industry should go down. And people make less mistakes, so there's less profits to share in that sense. And that's it for me. As I said, if you don't follow us yet, scan the Discord code, follow us on LinkedIn, follow us on Twitter. as I said, there might be a token, so there might be an airdrop. So at least come in for the airdrop if nothing else. And thank you very much for coming here tonight. And I'll be taking questions before we have the next speaker.
When token?
It's early next year, but for you we will do like in 2 years.
Very
Bullish. More questions? No.
to get German.
Yeah, okay.